Now, this lesson is designed to address the common misconception between cryptocurrencies and Forex and even stocks. And what is essentially happening at the moment is you're getting waves of investors coming in who have traditionally been trading the stock or Forex market, and they're trying to bring the same approach to the crypto market. And now, the problem is the charts, the technicals, the fundamentals, and the overall dynamics of how the market works is completely different. So it's going to be a short lesson, but I just want to kind of abbreviate and explain to you guys how you need to approach this market. And you can already see just from the charts alone. For example, my XRP chart here, you can see the absolutely insane moves that can happen in a very short space of time. So we have got huge moves to the upside. This is a rise of almost 4,000%. And this took place within the period of less than a month. In fact, it took about 2 weeks. The spikes are a lot more manipulative. There is no real responsiveness to technical lines, in particular support and resistance. Now, there are certain strategies which we are going to cover in the next lesson on how to mark these levels. But even by taking a quick look at my Forex charts, you can see a huge difference in not only the space of the charts and the support and resistance, but also the way the levels are respected. So you can see off the bat that these charts and the lines, for example, the resistance, it hits resistance and it immediately reverses. It hits a support, it will break through, it will retest, and it will crash down. As you can see here, retest, breakthrough, bounce, up. The levels are heavily respected. When you go back to XRP, you're seeing a lot of huge rejections, spikes. If you can notice, I am actually putting my lines a lot closer together, and that is because if we were to get rid of these lines, you would essentially miss out on all of the chaos happening before it bounces from your support and resistance lines. So if you were to duplicate the Euro chart here, for example, and increase this even higher, you would have no way of really determining what's going to happen next, where the price will go, and in fact what you're even going to retest next. So we have to remember cryptocurrencies are currently in an unregulated space. It's driven from speculation alone. The technical analysis does work if you follow the strategies we use. However, if you're trying to take this with the same approach you would do in any other market, you're going to get burned and lose a lot of money very quickly. So what's happening at the moment is a lot of these investors are complaining, or they're trying to sell courses, or they're trying to post analysis that they would use in Forex, just like we would. And again, they're going to do this by posting Fibonacci's, lines, support and resistance, counter trends. And what's happening is they're drawing them incorrectly. So there is no such thing as a certain set of rules at the moment. It all depends on a case-by-case basis. So every single crypto you look at will be analyzed in a completely different way. So for example, with the XRP pair here, we have got a trend line and a counter trend, and these are actually going from the wicks to wicks. However, if this was Forex, this would most likely have been from here or here. So you can do this, but then there are exceptions where this will need to go here, or you can drag the line down even more to here, and as you can see, it is slightly respected. However, if you drag it up to here, there is another respected level and a breakout, but you drag it to this zone and we can see the real breakout is officially here. So again, it's a case by case basis, and you need to adapt to this over time. This will not come easy. This is where you have to come back to the videos, get the pen and paper that I did mention in the very first 2 lessons, and just keep going back and looking at these charts. The amount of time you spend on the charts is really going to determine what you get out of this in the long term, especially when it comes to getting entry points and exit points. And today, for example, we have this current situation where we have already broken out from the trend line, we've retested, we've spiked up, and we have dropped down from this zone. Now, many people would have been suckered in, expecting this to be a reversal at least back down to 2.3. However, we have not reached 23 cents, and price has already, within an hour or two, spiked back up to 26 cents. So in essence, all I want you to take home from this lesson in particular is just try and break away from the ideologies you already have from previous markets. And over the next few lessons, the strategies you're going to learn will have to be taken with a pinch of salt compared to what you've learned previously. I need you to reprogram your brain and completely consider this as a new asset class. So let's move on to the technical analysis. See you in the next lesson.